Good afternoon, everyone. Thanks so much for joining us to Victory Square Technologies Investor Webinar. This is a Q&A webinar. We've received a lot of questions come into our IR email, so we wanted to do a webinar for you guys addressing a lot of the questions. If you do have any other questions, feel free to put them in the chat section below. We will try to get to them if we can too. We'll just give it a few moments while we let everyone join. Just want to make sure audio is working. If you can give us a thumbs up in the chat or just let us know, that would be greatly appreciated. Perfect. Thank you so much. Hello. So I'll just give it a few moments here. And then we'll begin. This webinar is being recorded, so not to worry if you do have to leave. We'll make sure we get this sent out to everyone shortly after.
I hope we didn't take up too much of everyone's time today with back-to-back webinars. I'm sure a lot of people tuned in for Hydrate as well, which will be recorded if you missed it, as will this. So.
And thank you to everyone who did email in questions. We did receive quite a bit of questions come in, so we will be trying to address as many as we can too. There was some overlap too, so that's always great. So hopefully we can get quite a bit of yours answered too. Yes, we did get your questions too, Jeremy.
Oh yeah, Jeremy, they just came in. So just to note, there were a lot of questions. I had to tweak the format of today's webinar just because I received so many questions, and because we've been so busy of late and we haven't done a webinar in a bit, I'm going to focus most of the time on the Q&A and on the questions so I can get through as many of them as possible. So I will try to fit those in too, but there's a lot of questions around VST, Hydrate, the portfolio companies, GameOn, VRAI, Insu, etc. So I just want to make sure I can get to the majority of Q&A. Should we kick it off, Abby?
Yeah, I think we'll begin now, just to be mindful of everyone's time. If anyone else is joining us, we'll let them just come in. And again, if you do have to leave for whatever reason, not to worry. We'll have this recorded and we'll try and get it out as soon as possible to you guys too. So.
Abby, quick question. So when people, do I need to admit them in, or people will just automatically, if they want to
join?
No,
they'll automatically come in. Yeah, so it should be good.
Okay, perfect. Well, let's go. Again, thank you everyone for joining today and for the back-to-back webinars. For those of you that joined the Hydrate webinar, I hope you were excited. The Perfect Scripts deal is a big deal, and I know everyone's been dying to get some more data on the orders coming in and the margins. So I'll touch upon some of that with some of the questions that have kind of come in to us, but I hope everyone got a chance to hear directly from Shane and Vahid on that. Before I get started with the Q&A, I'll just do a quick recap and refresher of what VST is, what we do, and then we'll get straight into the Q&A. So Victory Square, we're a publicly traded venture builder. We don't just invest, we buy, build, and scale early stage technology companies. And then we help unlock value through spinouts, M&A, and monetization. We're not passive. We're not just a VC fund. We're more hands-on with the companies at their early stage when they come into the portfolio. And our goal is to give public investors access to these companies early. Normally, this upside is reserved for VCs and private equity. The business model, again, we incubate and acquire companies in high growth sectors, digital health, AI, Web3, now pet wellness, gaming. We try to de-risk early stage bets by plugging them into our kind of shared infrastructure. So when you come into our ecosystem, you get to use the benefits of customers, technology, best practices, and a huge advisory base of talent and other CEOs within our ecosystem. We monetize through public spinouts, strategic exits, and hopefully in the future, revenue participation and secondary sales. Why this is different? So most VCs returns are locked up for 7 or 10 years. In a private fund, if you are accredited and you get access to, ours are public, transparent, and liquid. We run lean. We're founders first. The focus there is to more capital flow into building, not bloated overhead. We offer diversified exposure, so the microcap space can be the Wild West, but when you're investing in VST, you're getting access to a bunch of our portfolio companies, whether they're private and or public. So you're able to kind of get a mitigate your risk and downside exposure. And because we're public, again, any investor can participate. There's no accreditation needed, no insider access needed to get access to those funds. Since inception, I think the NAV has grown over 100 million across the portfolio. I mentioned Hydrate earlier. That's kind of the outlier in our portfolio currently. The webinar was kind of before this. Hydrate's been, really a significant growth story for us. VST is a significant owner of Hydrate. Hydrate recently was ranked number 9 on Deloitte's Fast 50 for Canada, 9th fastest growing technology company in Canada, 56th in North America, which includes the US. A lot of traction there. We've had liquidity events in the past with portfolio companies as they were spun off, such as Fans Unite, CQT, Argo, Bluezell, and most recently Control. Our current focus right now is on Hydrate, Into Therapeutics, VRAI, and one of the latest ventures we mentioned in our most recent press release, which is a pet health project called Possible. So yeah, just a quick refresher on the background of VST. Thanks for letting me lay that out. I want to get directly to the Q&A, so let's get to it. This is not in any particular order. There was a lot of them, so I'm going to try to squish as much as I can. So the first question: will VST give out Hydrate shares as a dividend? We unlikely will give out shares in Hydrate as a dividend. I think our priority would be maximizing value through a future Hydrate sale, generating cash to return to shareholders. I think with Hydrate, that'll be cleaner, simpler, and more impactful. Second question: will VSDH1 cash flow ever benefit shareholders directly? There were a couple of questions around this, so I'm just gonna list them. So the other was, do you expect significant cash flow from the 10% share of VSDH1 in 2025 and 2026? If so, what is VST going to do with that money? And then it also goes on to ask, would you consider buying a slow growth, profitable cash cow business simply to de-risk VST and fund all future projects without having to sell shares of portfolio companies? Some VC funds have successfully used that playbook. So absolutely, that's the plan. VSDH1 is already generating cash flow. Our goal is to take that cash flow and to invest it, to buy, build, and back new winners. But what does that actually mean? So to the question about slow growth, profitable cash companies, I think now where we would allocate, and when I say buy, build, or invest, we want to always leverage where we have competitive advantages. When you look at Hydrate, that business, we've created a full infrastructure, the rails for to launch and scale a D2C healthcare company across the US. That market size, the opportunity, the problems in the US healthcare system, and this moat that we've kind of built with Hydrate and VSTH1, we've got nationwide 50 state compliance, licensed providers and prescribers, pharmacy and fulfillment, EMR scheduling, telehealth. But the most important thing is distribution. So to explain where we would use that capital and where we would take advantage of our unfair advantage, let's look at Possible as an example. We launched that because we noticed that when we look at our Hydrate ecosystem, and we ran a survey about 6 months ago, and it turned out about 58%, I think it was around 58, 59% of patients, doctors, nurses, vendors within that ecosystem have pets in the US. And all of these people are already spending additional money, not through Medicare or Medicaid, but their own cash for their own health and wellness. And they answered that they would use they would take that same care with their pets. And anyone that has a pet, I have two, which I think, are pretty much higher on the hierarchy in our family than myself, to my children and wife. But we spend a lot of time and money on our pets. They're a family member. So when we look at where we're deploying capital, it's really like focused on the fact that not to say, hey, we're going into the pet space. It's because we've locked up distribution in the pet space with this ecosystem that's already been built. We've got access to pharmacy. So a lot of anyone that has a pet, a lot of the pharmacy prescriptions provided to pets by their vets are similar to compounded versions for humans. So there's a lot of opportunity. And that's one of the reasons why we're going into that space. Also in the past, I think people may have heard us talk about investing into D2C brands. So for us to invest into a D2C brand in a couple of ways makes the most sense to deploy that capital. One way is we can see D2C brands, and this is why we launched that accelerator at the beginning, the accelerator at the beginning of the year. We can see D2C brands that have optimized their, let's say, Google and Facebook lead gen, and that order flow comes into our ecosystem. The doctor comes through our doctor, so the visit goes through our doctor network, the prescription goes through our pharmacy, the payment processing goes through our payment processing. So now we're able to actually invest in those businesses or provide debt to them, revenue-based financing to come through our ecosystem. Again, we mitigate the downside risk exposure. We're able to assure, slow and steady profit, in some cases, greater profit. But it also helps to build our entire ecosystem and platform that we've built. So, yes, we have started to see the VSTH1 revenue trickling in. Where we would use that capital again is to invest into new opportunities. But those new opportunities we want to be de-risked, plugging into this unfair advantage we have. And Pausable is kind of an example of where we're looking with that. One other thing, just to reference like Pausable, because I've talked about pet health and pet care, is sometimes you also need a champion. We were very fortunate in Hydrate in that Shane Madden, was the champion. He was the thought leader. It's like building a team around a Connor McDavid for any Canadians out there, or a Victor Wembanyama for the NBA folks. Like building a company around a really really a core piece, a thought leader. And so Alex Chang, who is running Pausable, is that guy. He has been in the pet healthcare space for years. He was early in that space. He built a company, sold a company in that category, built relationships with Mars, which is the largest pet care company in the world. He was licensing data through Merck Animal Health. So Merck, again, large pharma company, huge owner of animal hospitals and vet clinics. So again, we're utilizing all of these different things to mitigate risk, create upside, but leverage some unfair advantages we have. One last note, so I would point out too, is at a future time too, apart from reinvesting into these new opportunities, I think we would explore other ways to return capital to shareholders. And depending on that cash flow, maybe it's in the form of a cash dividend, maybe it's in the form of a share buyback. Those are also other things that we would look outside of taking advantage of opportunities internally. If Hydrate is bought out, where does the money go? So if Hydrate were to be acquired, and we're not selling it, but this is just a question that came in, I would say the majority of that cash flow would go to shareholders. VST runs lean, so we don't really need much to operate, and our model isn't to invest 10, 20, 30, 40, $50 million. Like our goal is and our core competency is always to find these smaller early stage companies that fit within our ecosystem that we can plug in. They don't usually require a lot of capital. As people can see, most of the deal flow we've done has always been when our shares are trading at a premium, we will use shares to make that acquisition. So the majority of that capital would be distributed to shareholders. And just to note, I'm the largest shareholder, so I don't win by selling stock. I win when we have these types of exits. And again, to note that a VC model is a 7 to 10 year model. So it's not like you're returning cash or having those wins within your first couple of years. In some cases you do, but it takes time to build a winner. It takes time to make some bets and find that outlier. And so in the case when when or if that time happened, the majority of that would be that cash would be redistributed to shareholders, which I'm the largest one in there. And that's just generally what would happen in a fund as you approach that 10-year mark. So I think we're potentially 3 years away from that. So expect fireworks. Is the 12 to 13 million Copilot value just theoretical? Not at all. That number is backed up by real numbers and a real cap table. The last round that Copilot did a couple of years ago was around 49 million USD, which is about 70 million Canadian. I think we own roughly around 23% of that company. So, that would put the stake in probably the $15 million Canadian range. However, a couple of years ago, they were exploring a financing, and they had someone at the table that was giving them a valuation almost double that previous round they had done. And at that time, as part of that transaction, we were exploring actively selling a portion of our equity into that. I think it was around $5 million in a secondary transaction to gain, to realize gains for shareholders. At that time, Copilot didn't like some of the terms that around the VC. I think it specifically had to do with the liquidation preferences and control clauses. So they were happy with their growth. We liked the management team, so they chose to keep building rather than take restrictive capital. Yes, that value is real, not theoretical. And again, that team is continuing to grow and build. I think they've already surpassed 10 million in ARR and have continued to grow. And it's a strong management team. They're in a good sector. Hopefully we'll include some updates on the company too as well. I know they expanded into Asia in Q4 and Q1 of this year. One of the founders lives between China and Canada, so a lot of opportunity there. Is VST uplisting to a bigger exchange? Right now, our focus is on getting Hydrate listed on the NASDAQ. And this is why it makes sense. Hydrate is 100% US based from revenue to patients, to doctors, to nurses and partners. It belongs on a US exchange, and NASDAQ would be the gold standard for high growth digital health and tech companies. As an example, for anyone that is an investor in Hydrate and understands that sector, I mean, just look at HIMSS. I think HIMSS is trading at like 7 times revenue. And the multiple on their adjusted earnings is like bananas. But that's the arena we're stepping into. And the impact goes beyond Hydrate. So for VST, a NASDAQ listing for Hydrate brings more investor eyeballs onto Hydrate, which brings more investor eyeballs onto Victory Square. So again, higher visibility and credibility globally. For Hydrate, again, access to institutional capital and better liquidity benefits VST. Higher valuation multiple for Hydrate, again, directly benefits VST's equity position. And I think in addition for VST, it creates optionality because, we could choose to monetize some of our stake if, in a valuation re-rate. As an example, if you own equity in a NASDAQ stock, there are other options to borrow against that position. So no need for dilution or sale, but you can borrow against it to take advantage of other, high value opportunities without diluting shareholders. But again, most importantly, it would bring in a ton of new attention, to VST. So our focus again would be to get Hydrate uplisted first, and have VST benefit off of that. Why does VST trade below NAV? Do you care? Absolutely, I do care. And I feel like this question comes up often, and my answer is probably going to sound like a broken record. But yes, we do care deeply. We know it's frustrating when the market doesn't reflect the value we're building. But again, here's the truth. We're not here to chase short-term hype. We're here to build real long-term lasting value. And I've kind of said that repeatedly, like as the largest shareholder, looking at these, as a venture build fund or a VC fund, you're looking at a 10-year horizon. It's hard to, I know it's hard to not look at the stock price on a daily basis, monthly basis, or even yearly basis, given, VST share price being, trading significantly below its NAV for a long period of time. But again, there's that Buffett quote, which, he shares, in the short term, the market is a voting machine, and in the long term, it's a weighing machine. And we believe that, with the path we're taking, we will get weighed, and when we do, the market cap and share price of VST will re-rate accordingly. what we're doing is, and Hydrate's an example, we're building a company with real value, real IP, and a real competitive moat. And in, previously over periods of time, we've been able to unlock NAV and value through spinouts, strategic exits and monetization. And again, we're aligned with shareholders in that we own stock. Like if you look at a lot of microcap companies, there are a lot of hired guns. There's not an alignment with, where management is also, has significant skin in the game. VST is structured like a public venture fund, and again, like I mentioned, we're approaching that 10-year realization window where we expect, the biggest returns to materialize. But in the meantime, we're just focused on growing the portfolio's value, realizing wins like Hydrate, and again, pushing for optionality. We're not just looking, we're not just playing to look good today. We're playing to win long term. Any buyout interest in Hydrate? I feel like so many of the questions here are Hydrate, and I do know, just for anyone, there are GameOn questions, and I will get to them. Any buyout interest in Hydrate? And sorry, there's one other question that came in that I'm just gonna to read because I think it relates to this, and it says, since VST is trading at a 50% or more discount to the market cap of Hydrate, why doesn't VST just sell its holdings in Hydrate to realize fair value? Because I don't think Hydrate's valued at fair value right now. I think that we've just hit the flywheel. Anyone that's been following that story or tuned into what Vahid had to say, and Shane had to say, like, this thing is just getting started. So we think that there's so much more value to come out, and we really do believe that this is the outlier. But to answer that question, yes, we received inbound interest, and it's no surprise. I mean, the U.S. healthcare system, it's a $4 trillion market. It's 20% of GDP. There's no one dominant player in that category because there's so many challenges. But again, the U.S. system is broken. Patients are overwhelmed. Providers are overwhelmed. Patients are underserved. And there's this new generation of people that are now wanting, service or care anytime, anywhere, any place. So the huge market, no dominant player, lots of challenges. And I really believe that the Shane and the Hydrate team have built a really strong moat. I've referenced this before, but there's, Andreessen Horowitz, A16Z, which is one of the biggest, VC firms, in a report a couple of years ago, they said that, they believe that the biggest company in the world will be a consumer health company. And they referenced the other large consumer companies in the US, from Apple to Amazon to Meta and to Google, and that the healthcare opportunity is bigger than all of them. So, yes, there's been lots of interest. We think it would be too early. We think that Hydrate story has so much more legs to grow because, again, in that category, they've built infrastructure. They've spent years building infrastructure, the compliance rails in all 50 states. So this opportunity, this story is just getting started. And I mentioned HIMSS earlier. Like, you look at HIMSS, why not Hydrate? If anyone that's followed the HIMSS story and seen, the growth of that company over the last, I would say, 7 or 8 years, why not Hydrate? We feel that it's got all the makings to do so. So, yes, there's been interest. We would not sell. We feel, again, this is the outlier in the portfolio, and we want to push this. Has VST sold Hydrate shares to fund operations? No. Our core holdings are untouched. I think if anything, of all of the shares we own, there were some, maybe like 2 million max, that would be tied to like performance milestones to the Hydrate team and management, which I think are actually options. But yeah, no, we haven't. And no the monetization of Hydrate shares would not be to keep lights on. It would be if we get to a point where we think, it makes sense to, and the valuation multiples make sense, in the future to do, it would be to monetize for shareholders, not to keep the lights on. Why is regular. These are like, I feel like it was not in. This was not planned to have this all in one order. Why is regulatory complexity a competitive advantage? Um, because it scares off most startups. Compliance is a beast. It wasn't easy, but Hydrate built the rails. 50 state framework enforced in real time. I mean, that's a multi-year defensible moat. The team had to go state by state through multiple boards, pharmacy, medical, and nursing. And one of the advantages. So we've been Victory Square had been looking into the healthcare space for a long period of time, like dating back to 2016, 2017. The Hydrate acquisition took place in January of 2021. One of the things that we had just gotten through previously was we were heavily invested into the gambling sector or the gaming sector. And we navigated the regulatory hurdles in the US for that. And that gave us a huge, which we were successful in at that time. And that gave us a huge advantage in know-how and relationships to be able to actually navigate it for building this 50 state national infrastructure. So there were some core advantages that we had that we were able to take, which really helped us with this regulatory compliance advantage. What margins is Hydrate building toward? Vahid actually mentioned this. I think the goal is to get to, right now, I think they're in the high teens. I think the goal in August is to get to the mid to high 20s. And with the Perfect Scripts deal closing, I think they want to get that even higher and into the 30s. And I think he mentioned that. So anyone for that question can check the Hydrate webinar. And I think Vahid and Shane cover that. Why was acquiring Perfect Scripts so important? Again, I think the whole webinar before this was regarding that, but I'll just give a brief Cole's note. So it completes the loop. It puts Hydrate in a lead company. Before the deal, Hydrate powered demand. Licensees, providers, telehealth, pharmacy orders. Now we own the entire stack: demand generation, prescription authority, fulfillment and pharmacy control. This means higher margins, more control, faster innovation, and far better data visibility across the board. Instead of relying on third-party pharmacies, we now control costs, quality, timing, and most importantly, revenue capture. It also allows us to roll out new products faster and more profitably. From an investor standpoint, this turns Hydrate from a fragmented platform into a vertically integrated digital health company. This is also a huge leap in valuation potential. Standalone D2C brands, I think they trade at 1 to 2 times revenue. If you're a vertically integrated health platform, you're trading at 5 to 10 times. So this deal is a huge value unlock, and it sets up Hydrate to scale smarter, not just bigger. Okay, I'm going to skip some of these Hydrate questions and try to get to some non-Hydrate. Okay, how many CXT tokens does VST currently own? I believe we currently own about 2.8 million tokens. And again, we're continuing to monitor the ecosystem. We love the team behind Covalent, Ganesh Swamy, and Adrian Jonclass. Like, Ganesh is a thought leader in the sector. Ever since they migrated from CQT to CXT, the token values declined. But we believe in the team. We had 6 million to start. We've been able to monetize tokens over the years to reinvest in new opportunities. Yeah, we hold about 2.8. And just as a side note, we are working on some interesting projects with some of the Covalent team in the Web3 sector and space, just incubating in the background. So there will probably be more information to kind of come about. I would say in Q3 and Q4 on that. Is VST liable for VRAI's debt? No, VST is not liable for any of VRAI's debt. It's non-recourse by design. We intentionally structured it that way to protect VST shareholders and keep the risk isolated. Having said that, I mentioned this in the Discord channel that I've been actively working directly with VRAI, specifically with their lenders to convert that debt into equity. And I'm confident that we'll be able to do that and clean up their balance sheet. And one of the reasons why is that there is IP that inside of VRAI that's come from the past projects they've done in the location-based VR space. As an example, there was IP built in there. So when you're in a location-based environment, there were haptic gloves with signals. There were temperature and heart rate monitors used in some of the games. There were other types of room monitoring technology used as a patient, or sorry, not a patient, as a player would go within that to experience different types of games and IP being built. Some of that was able to be repurposed into the healthcare sector space, which they had been piloting. So much so that, and this kind of ties into one other question, which I'm just going to kind of include into this, that just came in, and it was regarding a transaction that VRAI announced in December of last year that has since been terminated. And that transaction was the acquisition of IP in the CGM space, the glucose monitoring space. So that was an example of IP that they'd built that was being piloted with this company's CGM. That deal ended up not working out in the way it was structured, but VRAI ended up actually building the IP in-house, so it worked out anyways. But to the question, VST is not liable for any of VRAI's debt. But having said that, we are working with VRAI separately to have that debt converted into equity at a really favorable, kind of valuation. Will VST CFO or VRAI CEO be on this webinar? CEO be on this webinar? No, I can kind of speak to both. So there was some conversations in our Discord channel about the overlap. So and this kind of ties into another question around VST filing its financials on time. So the VST filed its 2024 year-end financials and Q1 financials late this year. That's on me. It's happened before, and it happened again, and it shouldn't. And I take responsibility for that. We've made adjustments internally with some of our processes and governance and internal controls to prevent that from happening again. I don't want to make excuses to why it happened, but again, we've got a lot of portfolio companies, and getting information was a bit challenging. However, that's been our business model for a couple of years. So really, that falls on me to make sure it gets done. VST uses a fractional CFO, and we have a back office that's outsourced to do our bookkeeping, corp sec. When our portfolio companies get spun out, it's kind of advantageous to kind of have that and cost effective to have that back office kind of continue to take that role on for some of the portfolio companies. But in each of those cases, there's a separate CEO and a separate board. So in order for a CFO or in order for a back office to do what they need to do, they need to have proper guidance from the CEO or board of that company. So in the case of VST, that's on me that to take responsibility for that and to fix it from not happening again. In the case of GameOn, there were a lot of challenges because the board was very, there was a lot of board members that weren't, kind of associated with, I think we had two board members that were kind of associated with VST and VST portfolio companies. And the CEO was in another country, which, caused some challenges. And the staff and employees were kind of all around globally. And access to information was a little bit challenging at that point. In the case of VRAI, there were really two big reasons why that company filed late. And it wasn't to do with the back office or the CFO. It had to do with two things. One was finances, because the scope of that audit got significantly bigger. Last year, in the middle of the year, VRAI deconsolidated all of the operations that were part of the Synthesis VR business. And the auditors wanted the full year audited on that. So that additional time takes time. because that business again is global, and two, just the cost scope on that kind of overran that. So so I know a lot of people have made comments about the CFO in the back office, but in each particular case, it's kind of like isolated to, you know, to those. But from a VST perspective, that's on me. We've made adjustments for that not to happen again. How do you explain? How do you explain the? So I'm phrasing the questions how they've been written. So just as an FYI, how do you explain the failures like fans, Get, and VRAI, and what are you doing to fix past execution and credibility issues? We hear this a lot, and I think it's important to kind of set the record straight. VST is a venture builder. Like any VC, we take early stage shots to find outliers. Not every bet is going to be a home run. That's just the math of the game. The goal is to build or back, you know, a 10x or, you know, opportunity while managing downside when things don't go as planned. We do that by coming in early when the risk reward is asymmetrical. So again, like very early, these teams are smaller in most cases, and this is how the portfolio started. It's obviously evolved and changed, as I mentioned in an answer earlier, where we're now focusing on, let's say, the infrastructure that's been built through VSTH1 and Hydrate, where we're mitigating downside risk exposure. We're building into distribution already set. But when you're starting that portfolio and you're in a variety of different sectors, to get that asymmetrical reward, you're coming in early. We also run very lean so that more capital, you know, flows to the company, not overhead. And when things don't work out, we try to monetize that IP, restructure it, or turn it into a clean shell so the value isn't lost. So again, we come in early. It's almost like that baseball analogy where, you know, if you hit 3 out of every 10, if you get a hit on 3 out of every 10 at bats, you're in the Hall of Fame. Like it's, you know, it's you know, that for us to be able to not miss out on those really big opportunities in the case of, let's say, like a Hydrate, you gotta kiss a bunch of frogs. You have to take some of these risks, especially when you're coming in early, and it doesn't always work out. And I think in some cases, you know, like when you look at GameOn as an example, this was a company that came out of a Comcast Techstars accelerator. So Comcast, huge company, you know, owner of cable, cell phones, arenas, sports teams. Like the company and the founder came out of that incubator, like vetted by that group and team. That board was a pretty savage board. If anyone looked at when they listed, like there was a really solid board on there. When we came into the business, it was, you know, the IP was a bit different, but we worked on it. We took it public with the founder. We helped the founder take it public. We issued a share dividend. So we gave shares away to our VST shareholders for free in that deal. And that stock traded for a couple of years, and it traded at different valuations. But once it's spun out and it's got its own independent management team, like we are there to support, and we did when they were exploring the token offering, and we leverage our experience connecting them to Polygon and Arbitrum and Hedera and La Liga and PFL, and you know, we leverage those relationships. But at the end of the day, like that CEO is taking a huge swing, and there's only so much, you know, we can do. But like with all our portfolio companies, when our portfolio companies are performing well, we share those highlights. When they give us highlights, we share those highlights. So in the case of GameOn, I think, you know, I wouldn't look at it as, I feel it's unfair to say that we didn't execute or there were credibility issues on VST's part, because again, we found that deal out of a really good incubator. We got in really well. We helped take it public. We gave away shares. It went public, I think, in May of 2021. So October of 2024 is almost 3 years later is when it started to, you know, the issue started to really unravel, where it traded during that period of time. And there were announcements, they were audited, they put out their own financials, investors talked directly to those CEOs. But again, investing in VST, whether that worked out or not, this is where I go back to the diversified risk approach, which is you would have had access to everything else within our portfolio by investing into VST. So I feel like that it sucks what has happened. And I know there's some other questions which I'll get into on GameOn, but I want to also talk about fans, like, because fans gets mentioned into this a lot too. Fans came into VST's portfolio, I think in like 2017. We acquired the business for maybe, I think, around 1.2 million VST shares. It was an all stock transaction. We worked with them. They did a financing in 2018 at a significantly higher valuation. Um, they planned to go public around that time. They were building in the blockchain space. It didn't work out. They adjusted and modified their strategy. They went public at the beginning of 2020. We struggled to get it public. They went into the traditional sports betting space, made an acquisition, and in the fall and winter of 2020, and the spring of 2021, that stock traded like I think it's traded, went from 25 cents to like $2.50, traded tons of volume. They did a number of financings with Canaccord, Stifel, like large investment banks betting, doing DD, financing them. We were not part of the management team. We were not part of the board. We made money. So VST got some liquidity that allowed us to actually reinvest into building the infrastructure for Hydrate. That following, like in 2021. So fans was successful for us. It got spun off. Any VST investors that would invest in it, there was liquidity, there was volume. They did follow-on financings. I think what hurt them were a couple of things. One, they made a really large transaction of American affiliates. So anyone that's followed that story, the transaction was not structured well. And I think that was, that signaled kind of the downfall of that path. But it still ended up, again, being taken out by, I think, GeoComply at the very end. But to me, we came in early, structured a good deal for VST, helped them raise money, helped them go public. The stock performed well, traded volume. They did large financings. They made acquisitions. We got liquidity. It was a huge return for VST. Could that outcome have been better? Of course, but again, it wasn't really, I think, because of us. So sometimes I feel like the execution and credibility issues around that are unwarranted. Getting our financials filed on time, absolutely on me. Got to fix it. But I think with fans and GameOn, it's important to share the full story. VRAI was mentioned in that question, and I think VRAI still has legs. Right now, the focus is on getting their financials filed. But I would stay tuned because I know that we are working actively with them to get their debt converted, and I know there's IP in there, and so to me that story is still yet to be written. What's the status of GameOn? So first off, I apologize for anyone that's upset that I haven't been more active or vocal, specifically on our Discord channel about that. It's a really, really difficult situation because the founder and CEO is no longer there. The employees are no longer there and disgruntled, and they're all over the world because that team was over. The board is pretty much non-active. There's considerable debt on the company, and for me, my primary focus is VST. So with VST business, VST financials, the work that we participate and support on Hydrate with Insu and VRAI, where we have huge material stakes, I have to really be respectful of my time. So it's not that I'm not sharing information. I'm still trying to gather information, but I have to focus my priorities on VST and VST shareholders first. But to answer that question, what's the status of GameOn? So in my opinion, GameOn as it existed is very likely done. I know that this is frustrating, but like I mentioned earlier, I'm still trying to get the full picture. And so when I look at those factors of founders, gone, employees gone, board pretty much gone, huge debt, vendors are owed money as well. This is a messy situation to resolve it in its current state. Now, having said that, I think once um, once I'm able to gather all the information, I think what maybe the best outcome there is to protect shareholder values, to find some sort of solution where VST can repurpose some of the IP or tech. So we assisted in those introductions to Polygon, Hedera, Arbitrum, like within that ecosystem and some of the brand partnerships that they did. Um, there may be an opportunity, to repurpose some of that, where what we can do is uh, on the VSC side, identify, how we can, if we are able to repurpose that IP or tech, how can we, ensure that VST GameOn shareholders or GameOn shareholders are able to benefit from that. The unfortunate thing is that there's so many lenders and debtors on that balance sheet that I think before it even would get to GameOn shareholders, like there's a ton of fat to chew through there. And again, I just want to reinforce, I'm the CEO of VST, so my number one job is to protect and grow value for VST shareholders across the value. But I will still continue to do what I can in the GameOn case. But my opinion is that as the business existed previously, I don't think that is a reality. I've had some shareholders reach out to me directly, and I've mentioned that I'm more than happy to personally set up a call to dive in a bit deeper for those shareholders. So if you would like, you can send me a note on the Discord channel, or you can email me directly, and I will, focus and talk about that. Um, what's the status of XR Immersive Tech, VRAI? VRAI is not dead. I'm helping the company finalize their filings, clear their debt, monetize its health IP. I feel like it will be brought back to life, and it'll be leaner and smarter. And like I mentioned earlier, I don't think that story has been fully written yet. Uh, what's the benefit of a public vehicle like VST for early stage investing? Um, this kind of ties into what I said at the very beginning. In traditional venture capital, most people are locked out. You need to be accredited. You need to know the right people. Sometimes write a check of 250 to get in the room, and your capital is locked up for 7 to 10 years with zero liquidity. VST was designed to change that. We brought the venture model to public markets, so giving everyday investors access to early stage, high upside opportunities without needing to be accredited or without locking up your capital. All you really needed was a brokerage account. So with VST, you get diversified exposure. So access to early stage companies across multiple verticals. We've been involved in health, AI, fintech, solar, gaming. There's transparency in that our companies, the VST's financials are public and our moves are visible. Liquidity, you can buy or sell your position any day the market's open, or whether you're happy or upset with management, it's your control. And upside from both NAV growth and potential monetization events like spin-outs or dividends. VST is one of the few platforms where anyone, not just VCs or insiders, can get access to, let's say, Hydrate, for example, before the big re-rating. It's venture capital for the people, and we're just getting started. What's your 3-year vision for VST? 3 years from now, I think in 3 years from now, so this process started around 2017. Funds have about I'd say a 10-year horizon. So 3 years from now pretty much puts us at, I would say, the 10-year period. The biggest thing that I would want to see there is that large exit of one of our portfolio companies. Right now I would say that would look as if it would be a Hydrate. So like a large outlier where that's where you distribute cash back to shareholders. So the first thing I would say from a 3-year vision is 3 years puts us at the 10-year mark. That's when we need to be delivering that home run win for shareholders. In addition to that, and concurrent to that, I want to see the NAV, 3 to 5 times higher, driven by scale, spinouts, and liquidity events. And really, like, hopefully sentiment. I mean, I think the biggest thing would be sentiment among shareholders that they found their multi-bagger through VST. I've said this before, like, I know it's tough to be, it's been tough to be a VST shareholder for the last couple of years, because if you came into the story in 2020 when the share price was trading higher, from a share price perspective, you've seen lower volume, you've seen, decline in price. But I believe in what we're doing. I think fundamentally is get better every year as we go on. I feel better about the company today than I did in 2020. So I think apart from having that big win to be able to distribute cash to shareholders is really having the sentiment amongst VSC shareholders being positive and upbeat and happy from being rewarded for their significantly rewarded for their patience. I've got a bunch of questions that have just come in. I'm just going to queue through them really quickly. We've kind of gone over, and I don't want to miss a lot, so I'm just going to see if there's questions here that have come up a lot. Give me a second here, guys. So will the Hydrate webinar? Oh, yeah. So the Hydrate webinar will be posted to this. Will be. I can, once it's up on YouTube, I'll get it posted on Discord. Share buybacks would be my preferred way of returning dollars to shareholders. I think that's something we would definitely explore. I think the first thing from a Hydrate perspective, I want to keep the cap structure really, really tight, because I think that's going to be beneficial to the story as we continue to move it up. I really want to, the ideal aim would be to get to that point where there's a cash exit that can be, where cash can be distributed to shareholders. But I think when you distribute cash to shareholders, it can be done through share buybacks or through a cash dividend. So I think for us, the focus would be on maximizing value. Once that value is realized, then the mechanism of distributing to shareholders, I think we would most likely ask shareholders what they like. But again, ultimately is to get cash or value back into shareholders would be the key, not to keep it into VST, because VST's model does not require lots of capital. When do you expect a NASDAQ listing for Nurse if you're to time box it? I would anticipate Q1 or Q2 of next year. Are you planning to hire more talent to VST directly? No, I think one of so VST has gone through a bit of an evolution. So, the first couple of years are building that portfolio. So you're basically making your bets and getting your anchors in a variety of different categories, whether that be like Web3, healthcare, gaming, renewables, like, quantum, like, and again, you're finding these early companies, you're building them up for 12 to 36 months. Then the next phase is the spin out, which again takes more time for those companies to kind of grow independently on their own. At that time, you require more bandwidth. But the way our model works now is we're very lean in that we are able to leverage the CEOs of the portfolio companies, the teams of the portfolio companies, the IP, the customers, to really kind of be used every time we look at a new opportunity. And so we don't really need to stack, to increase the size of our team, because now that we've got anchors in all these categories, if we choose to go deeper into a category, we've already got a built-in ecosystem. And specifically, I mentioned earlier, our focus is on healthcare, because in healthcare we have infrastructure, distribution, pharmacy, payments, people, like the full gamut. And so when we look at that, we're really looking at, okay, pet health opportunities. We've got a really, really good captain in Alex who's done it before. Two, we can just plug it into our ecosystem so that we mitigate the risk exposure, we mitigate the cost to build all of that, and we can get to cash flow earlier. Two, we are able to see a lot of D2C companies. D2C companies, the benefit here is we can invest in them, provide revenue-based financing in those opportunities, which again, completely de-risks, gets us to cash flow earlier. But we're also plugging them into our ecosystem, which benefits Hydrate, benefits VSTH1, which also benefits VST. So We don't need to hire more talent into VST directly right now, because I think we in this phase that we're in right now, we want to go deeper where we really have built a moat and have a competitive advantage. Are you comfortable you won't dilute VST shareholders? Yes. I'm the largest VST shareholder. I don't want dilution. There was a question asked actually, which came in by email from Jeremy, which was really related to which I think kind of validates my answer to this question, is that we haven't really had dilution. So VST generally has been acquisitive when our share price is trading at a premium, and we've used shares to do that. And it's important for two reasons. One is that when we're making an acquisition, we're taking a material stake and we're getting married to that founder for a period of time. And we want that founder to have skin in the game. Just as a side note, if you looked at the way that the Hydrate Perfect Script deal was done, was very similar. Brandon is incredible, the CEO of that. He's a thought leader. He's a successful entrepreneur, multiple exits. But it's such a key part of our business that we want that person to also have skin in the game and be a partner as we build that. So it's the same approach we've taken. So we've never really needed to go to the market to get money. The other thing is, anyone that's followed the VST story will know a couple of things. One, if VST ever needs capital, I've always provided capital or access to it to make transactions and acquisitions. And I've also leveraged my personal relationships to do the work on things that might be super moonshotty at first, to not have to require cash from VST, such as Insu or such as Plausible. These projects, like if you talk to Alex or you talk to Dr. Singh or Ahmad, like they'll tell you, I've been working on and personally funding these projects for years, but giving the value and benefit to VST. So we haven't really needed to go and dilute shareholders from a funding perspective. Also, furthermore, VST did one financing in November of 2020, where we raised, I think, 5.8 million at 52 cents a share. And the only reason we did that is, up to that time, everyone kept telling me, you need to dilute your shareholder, diversify your shareholder base. You can't keep funding it. You need to bring institutions in and brokers in and all of these different types of things. And so we did it. It turned out that most of that financing came from myself, which I think I participated $500,000 in it, and friends and family. And I realized that from a capital markets perspective, brokers and traders will come in for fast money. So if the market's great, they'll jump on. If the market's down, they're on to the next story. And what I realized is that, again, dilution is going to hurt where we want to go, or the wrong dilution is at the wrong price. And so we haven't had to afford for that. So to answer your question, no, I don't expect dilution on VST, because we don't need capital. And if we do, we're able to kind of, self-sustain and fund what we need. Insu update. So Insu update, this is a bigger update. We will most likely share a release on Insu, I would say within the next couple of weeks, with a webinar with that team. So the patent application I know has been applied in Japan and Europe. They've now started to pilot with Ozempic. So insulin is the core focus of that, but the patent applies to 8 other injectables, which include GLP-1s and testosterone. So I know that they've already started working on the Ozempic side. But I will let that team kind of share that information directly. Is Hydrate and VSTH1 finding it more time-consuming and costly to onboard customers than expected? And is there scope for the time to onboard to improve? This is a really good question, and I'll break it down into 2 parts. One is that we did. So, at the very beginning, there was such a demand for a VSTH1 license, and we saw those numbers really jump. But what we saw when we tried the onboarding, when we started the onboarding process, is there's a number of factors as you're taking a patient from one physician network to another to ensure that they're getting the proper prescription dosage, and a lot of times it's recurring dosage. And you're also integrating that company's or that licensee's ordering into your system, managing payments, also for us to do DD on their, on their process to ensure that, they're fully compliant, and then being able to take all of that to ensure that they're legit script certified, which that process ended up taking, a longer period of time. And we also, that whole process was taking place during, the U.S. presidential election, and a lot of like, tariffs and a lot of things that were happening that were creating a lot of noise and into that. So that initial, we experienced that originally. Now I feel like it's seamless. We've got it down pat, and onboarding is happening a lot more swiftly. And I think Vahid and Shane mentioned on the call, like you're seeing, a lot of people touched upon this 1.3 million order, which order guidance, which came from, which I think came in October, November of last year, whereas we're now seeing those numbers. So I think Vahid and Shane shared that June's numbers were on par with what they were expecting, if not a little bit higher than what they predicted in October and November of last year. July is exceeding that number, and they're expecting by August again for this ramp up to continue. So they're seeing the numbers. Anyone that's followed the story too as well, like they've communicated that within the next 2 weeks, you will see an update with those numbers, and those numbers to be continued. Once you start that, you have to continue to update those numbers. So that confidence, I think, should be reassuring to investors. Can you talk about legal and regulatory risk malpractice from front-end partner companies of VH1? That's probably more of a Shane question. So I will copy that question, share it with him, and I'll answer that on the Discord. Just because again, if we get into the specific weeds, that's probably a better to hear directly from the source. With the 1.3 million sales goal, 1.3 million order goal goal through VSTH1 this year, what would be the dollars coming to VST? I don't have those exact dollar figures right now, and I would most likely for sure want to confirm with Nurse on those numbers before sharing those, just for compliance reasons. But I know that on the margins, VST would get about 10% of the profit on that. The way it's looking is that number will be significant. But one other thing too is the way VST owns, I think, mid 50s to high 50s% of I think it's 58% maybe of Nurse, and it's consolidated within our balance sheet. So what you're going to see is all of the numbers on the balance sheet, all of the profit on the balance sheet. But the net to VST would be, I think, 10% of that, which is looking to be significant. I think I got through almost everything. There were some email questions that came in that I apologize if I haven't gotten to them. I will. One more just popped up. Will the Perfect Scripts deal improve profit? And that's improved. Absolutely. That deal is a game-changing deal for so many reasons. One, it improves access to supply, consistent supply, pricing, better margins, higher valuation, higher multiple valuation on the company, because now it's fully vertically integrated. And also too, it's a compounding pharmacy, which we're now exploring the compounded products for the pet sector in space. So that is significant. To own the full tech stack, right? You have, from tech to payments, like the entire rails to pharmacy to nursing to medical. It's that was a huge deal, and not just a big deal, but it's the right partner. So many times, you're when you're getting into a relationship, it's almost like a marriage, right? You want to make sure that you're getting married to the right partner, because this is a core partner has skin in the game. We've already in the onboarding process, we've already had a chance to work with them through challenges, adversity, that we know this relationship is battle tested. Everyone, thank you so much for jumping in. I think I got everything that came in through the webinar chat. I tried to answer as much of the questions that came in earlier. There was some more Hydrate stuff, but I really wanted to make sure that people realized that there was, I also wanted to talk about GameOn, VRAI, into possible some of the others, Copilot, as well. So I hope I got to most of the questions. If I missed anything, feel free to email me. Again, I want to reiterate too, anyone that wants to talk more about GameOn, please feel free to email me and I will have a special thing, because I also need to be careful about what I say there too. But again, not ignoring it, not trying to jump away from it, but I will specifically have a call for anyone that wants to talk about that. So everyone, enjoy the rest of your Thursday. Thank you so much for your support, for tuning in, and yeah, hopefully we got bigger and better things on the horizon. Cheers.